welcome back to my channel. This is Shashank, local real estate agent with Keller Williams Legacy. We are here with another video. So this time I have Ben. He's from Direct Mortgage Loans and he's another one of my preferred lenders. So in this video we are going to discuss about the refinancing options, what exactly is refinance, and then we will discuss some of the terms that are associated with the refinancing things. Ben, welcome back to my channel. How are you doing today?
I am doing well, Shashank, and before we start getting into all the lovely refinance stuff we're going to get into today, I just wanted to say thanks for having me.
Yeah, absolutely.
And I really look forward to this opportunity and sharing some information with your audience.
Absolutely, and thanks for stopping by. I really appreciate your time.
Absolutely.
So let's begin with, let's just dive into it. So basically, can you just elaborate, like, how does one know when is a good time to refinance, and who should think about refinancing as a general,
Sure.
Yeah.
Yeah, absolutely. So as of today, it's February 16th, 2023, and right now we've seen interest rates as high as they've been for a few months. So the likelihood of you doing what's called a rate and term refinance, which would be simply a refinance just to lower your interest rate, the likelihood of that in this current market right now is pretty slim. However, there's a number of situations depending on your specific scenario where a refinance might make sense. So I thought of a couple opportunities, a couple options that might make sense for some people. So one of those would be if you're currently paying monthly mortgage insurance of any kind, whether that's in an FHA loan, which would the mortgage insurance you pay for the life of the loan, the entire time you're in that loan, or even a conventional loan where maybe you put down less than 20% and you're paying monthly mortgage insurance. If you're currently paying monthly mortgage insurance, I'd highly advise you to reach out to Shashank to see what your home is currently worth right now in this market. We're in a shifting market, as we commonly talk about, and it'd be important for you to get a really good understanding of what that value is today. So if you do have a significant amount of equity in the house, it might make sense depending on if you need funds to pay off some high interest debt, or if you have like a life event coming up, or like a wedding or something like that, or kids going to college and you want to liquidate some of that equity out of your home. This might be a good way to do that for you.
What I'm hearing is that first of all, like, everybody's situation is different, and if just by going online and like a lot of people read about the current market statistics, and then they should not assume that it might not be right for them or it is right for them. So the best way is that they should reach out to their lender or realtor or any kind of professional who's working in this industry, and so that they can make a well-informed decision.
Absolutely,
right?
Absolutely. Okay. It's critical that you align yourself with a real estate professional that's going to act as an advocate for you and your financial asset that is your home, that is your property. So Shashank has a number of resources to be able to give you that information, and I would highly advise doing that. And I would also like to offer my own services up from the lending standpoint. If anyone has a specific question, depending on their unique situation, I'd love to go over that with you and answer any specific questions you might have.
Yeah, I'll definitely put the links below for both your website and my website, and then if somebody has any specific questions, they can put in the comments below, so then we can make a video on that, or we can just address those specific questions as well.
Absolutely.
You said, like, if somebody's paying mortgage insurance premium, and if they have 20% equity, then they can refinance to a conventional loan. So can you just briefly elaborate, like, who pays mortgage insurance premium, and what do you mean by 20% equity?
Sure. So with an FHA loan, it's important to note that you pay your monthly mortgage insurance for the life of the loan. So if it's a 30-year mortgage
Right.
for 360 payments, you're going to be making that mortgage insurance payment. When you are in a conventional loan, you're going to pay some sort of mortgage insurance until you have over 20% equity in the home.
Okay.
So depending on when they bought the home, they might have put 5% down in 2019, 2020.
Okay.
With the way that homes have appreciated since then,
Right.
they might be over that 20% threshold and no longer need to pay that mortgage insurance premium.
Oh, okay.
Now,
Makes sense.
it's not always necessary that they even have to refinance to get rid of that mortgage insurance. Again, it's just specific to the specific situation, the unique situation that you have with your property.
Okay. So, what is the best way to know how much equity does somebody have in the house? Like, can they just go online, see what their house is worth? Like, how should they go about it?
So before I answer that, I would just like to take a second to kind of define what equity is.
Okay, yeah, sure.
I feel like it's kind of one of those terms that gets thrown around.
Absolutely, yep.
And oftentimes people, it's a word that people hear all the time but might not
But they
understand.
don't exactly understand what it is, and they make assumptions to it. Yeah,
Exactly.
that's a good.
So simply put, equity is the amount of money between what you owe on an asset and what that asset is worth.
Okay.
So for example, you owe $200,000 on your house and you reach out to Shashank and he does a market analysis on your home and he says that your home is worth $300,000, then you have $100,000 of equity. That's that space in between. Now, when we refinance you, if you want to pull some of those funds out, we're able to use a certain percentage of that equity to get back to you in the form of cash.
Wow, that's good to know. So also another point is that if I buy a house for $200,000 and 10 years later it appreciates to $300,000, so the equity is the difference between what is currently worth and what I owe. And also in those 10 years I've been paying my mortgage.
Correct.
So my principal has been decreasing. So equity is more than 100,000 because it is like what is the difference between the current value as well as what I owe to the bank.
That's
right? So I might be owing probably 150.
Yeah.
And then so equity is basically $150,000.
Absolutely.
Okay.
So and that you brought up a phenomenal point there. My example is very kind of simple.
Yeah.
But what you highlighted is exactly what I love about real estate is as you are paying down that principal as you owe on that home, it's appreciating in the same time. So your equity is growing rapidly, as opposed to, you're paying down the balance of a car, but that car is depreciating. Exactly.
Yeah.
So yeah, I just think
that's what makes investing in real estate or just like home buying a good asset. Because
absolutely.
Typically over a period of time is going to appreciate in value.
Yeah.
And then like you're investing in your future in retirement or whatever. Like it's better than like that's a topic for another video. But like it's better than just renting.
Yep.
Versus when you buy, then you are investing in yourself, and also there are lot of advantages of home buying. But this is
tax
a very good point. Tax benefits.
Yeah.
But
all
this
kinds
is
of stuff.
but this is a very good point. Like you build up some equity over time. So we're talking about equity. There's some terms like regarding refinance. So one is like cash out refinance, as well as there is an option for home equity line of credit. So can you just elaborate, like, are those two terms the same, or if they are different, like what do they mean?
Absolutely.
Exactly.
Yeah, so often they're confused as synonyms. They are not the same thing. The intention of both is to liquidate funds from the equity of your home and to give it to you for the purposes of something else, whether that's consolidating debt, another purchase of some sort, or what have you. The home equity line of credit is a second lien on the property, so you're not touching your initial mortgage. It's a second lien on the property with a different interest rate, and it also the added benefit of that is you can keep it open. So you have a $50,000 HELOC and you pull out $40,000 of it to pay off your high interest debt. Then you pay down that HELOC to a zero balance. 10 years from now, you have a wedding, you have something else that you need to pay for, you have access to those funds again, which could be advantageous again, depending on your specific situation.
Right. Okay.
Now, a cash out refinance is you are refinancing your initial mortgage. So the first lien on the property would then change. Now, the difference again between a HELOC and a cash out refinance, if someone has an exceptionally low mortgage rate right now, as we've seen people who might have purchased or refinanced in the past 2 or 3 years, and they've got a really low interest rate and they don't want to lose that, a home equity line of credit might be advantageous for them.
Option.
Yeah, exactly. Where if we were kind of in a different interest rate environment and interest rates were a little bit lower, it might make more sense to go just with the cash out refinance.
Okay, but that's another point to advantage of home buying, that you can tap into the equity of your home whenever you need some. It can be an unexpected, expense that came, unexpected circumstances, or even if you're planning to renovate your house or you're planning to buy another property, you can tap into that equity in your home. You can take a HELOC or you can take a cash out refinance, and then you can use that money to make more money for you.
Exactly.
So that's what makes real estate so powerful.
And you made a beautiful point there. I failed to acknowledge that oftentimes people use these funds to improve their property. Right? So as you're pulling out these funds to improve your property, and then guess what happens to your property? The value goes up.
Value appreciation.
Exactly. So you're really making your money work for
you. So this is better than taking a personal loan or another loan from the bank, which might be at a higher interest rate than a HELOC.
Correct.
Right?
Yep. So, absolutely.
Okay. And then also it depends on an individual situation whether you have to do a cash out refinance or a HELOC, but both are equally good tools for borrowing some money against your home, and then you can always pay it back, and then both have their own pros and cons. But if anybody is interested, they can always reach out to a lender like Ben, or if you have a realtor or if you're working with a realtor, then your realtor will be able to connect to a preferred lender. Like Ben is my partner here, so we will be able to guide them throughout the process and educate them to make the best decision for their particular situation.
And the message I'd really like to get across is real estate and owning real estate is such a great wealth building tool that even if your intention isn't to be an investor who has 15 properties in their portfolio, maybe you just own your home, and that's great because you are building wealth, you're building equity constantly in it. So the important thing is to align yourself with real estate professionals who are going to advocate for you, and really make sure that you're maximizing the benefit of that asset that you have. Because often people don't do this every day. You and I do this every day. And they're amazing teachers and doctors and firemen and policemen and all these kinds of things, right? They don't have the time to look into this stuff, which is why it's important to align yourself with someone who's going to look out for you.
But that's why we decided to make this video, because a lot of people, they don't have the time to go online and search for these things.
Absolutely.
But also I would say, some people, they should not believe everything that they see on TV. Because there are so many people who are just giving out false information to people, are always scaring, the sky is always falling. So they should, individuals, they should also take some own steps, to educate themselves to understand the basic terms that are associated with the finances and with the housing and everything. So
and platforms like what you have here are an exceptional resource for that. There's no barrier of entry here. This is free content where you're gaining this type of information. So I hope people take advantage of that.
That's so. I hope that our goal is to share good content with people so that they can educate themselves and make well-informed decisions for their future.
Absolutely.
So that was great, Ben. Thank you so much for the information. I hope everybody you will like the content of this video, and like I said before, I will share the links below to my app, my email, and my website, and as well as Ben's email and his website. So if you have any specific questions, you can reach out to me or Ben, or you can also put in the comments below, and then we will try to address those specific topics, whether with another video, or we can just reply to those comments in the comment section below. Until next time, this is Shank from KW Legacy with Ben from Direct Mortgage Loans signing off. Thank you. Have a good day.
Take care, everybody.